Welcome back, or welcome if you're here for the first time. My name's Sam. I'm a six-figure funded trader with FTMO and my Forex funds, and I specialize in an order box strategy. In this video, I break down each of the 4 types of entry criteria. I break it down from the daily to the 4-hour to the 15-minute. I give you the targets and how to identify each of these types of entries and how to avoid getting caught on the wrong side of the market. You know, if that's something you're really interested in, I can't wait for you to watch this one. So stick around, like, subscribe, comment down below if you want to see anything else or if you have any questions. Join my free Telegram group and ask me anything where I will post my daily markups. And yeah, enjoy. What I believe the 4 types of entry with the strategy. We've got like the 15-minute continuation with the pro 4-hour trend, the 15-minute continuation counter 4-hour trend, and then 15-minute shock reversal pro 4-hour trend and 15-minute shock reversal counter 4-hour trend. I think it's important to have these sort of defined mainly for targets, really, so you know we're not overshooting what we can expect. I'm going to try to find examples of them in the chart. I think I'll start with the pro trend because they're quite easy to, well, not easy, but sort of straightforward in terms of targeting. Like I was mentioning just before, it's good to be aware of the daily market structure. You know, obviously, like I showed on the last video, we had the daily breaker structure. We were looking like for us to pull back into the extreme, you know, but, you know, as I was saying, we're not what we see. We don't use this daily as a point that we're looking for 15-minute shock and go. If we're 4-hour downtrending, then we're looking for the 4-hour to change its direction to, you know, either get a shock or uptrend. And then, you know, we're looking to get in a 15-minute shock out of that, you know. So the daily does give us a good idea of the market as a whole. But in terms of like our entry criteria, it's more of just like a confluence there that we're moving with the daily, or we're in the daily discount zone or in the daily point of interest. It's not actually something we're going to be looking at the 4-hour structure to really, and then a 15-minute structure to get our pinpoint targeting for our entry. So that's why I haven't put, otherwise it gets like pretty confusing to say, oh, for daily downtrend, daily uptrend. Because a lot of that time that doesn't affect these intraday trades, which we do so much. It's only when we get to like these sort of extreme zones where we're needing it to hold or break out type of thing for the daily. So I think I'll start with a 15-minute continuation pro 4-hour trend. Okay, so you can see, you know, I don't know, quite easily, hopefully, from, you know, this was our shock after we went from 4-hour breaker structures in a downtrend. We had wick, breaker structure there. And then, you know, this last sort of high of these wicks is kind of messy. What happens is when we get to like a point of reversal, that's definitely where the market can get quite messy. And, you know, there's not too much that you can sort of like gather from this, especially on the 4-hour. We had a wick. Obviously it held, and then we had another wick, it swept these highs, and then we had a nice dump, and then we got the reversal. So because you find it where there's bottoms and tops put in, it gets quite brutal and messy because there's a lot of fight in the market. You know, like even if you went up here, just to digress slightly, you know, we've got a lot of wicks to the downside, then we had a fail run of the highs, and we had a sweep of the highs, then, you know, so it can be quite aggressive and messy price action in these. And then you look at the other side of it, very smooth run up, but quite a nice downtrend. So, you know, it's these areas that we have to be aware of. Unfortunately, it's quite hard to know that we're in this type of area until it's, you know, we've already been probably caught out a few times. But just something I wanted to mention when I was just looking at it there. So we moved from a downtrend, breaking structures, okay, wick, did break that structure. Essentially, this was the last high. So we did close above that. So that's, you know, this is like an aggressive shock. This is what I would confirm, like a nice confirmed shock that we've broken above the last high that led to the low on a 4-hour. And then our market structure switches from there. We get another break of the high and then another break here, and then a break. So I think hopefully that's quite clear. What we would be doing here as we working our way down, each time we get this break of structure, what we're looking for is that's when we're drawing our discount zones on, because what we're expecting is when we get a break of structure, generally what we're trading is the retracement into this discount zone. If it comes, it doesn't have to happen, but that's what we're trading. So this is what I would say if you were just trading on the 4 hour, this is essentially what you're looking for. We're looking for breaks of structure. We're pulling our discount zone from the bottom to the top, and we're waiting for price to retrace into our points of interest in the discount zone. What we're doing is we're going one step further in confirmation. We're marking out these areas here. Okay, maybe this is partially mitigated, but maybe you just take the top of this 4 hour because we've already covered this one. What we're doing once again is we're marking out these areas, and instead of taking trades out of this directly down, we're looking for a market shift on the 15-minute time frame. And essentially what we're looking that could potentially happen here is a market shift that, if we wanted to go full counter trend, we go into there. But I'm just going to stick with the pro trend for now. So essentially, let me draw something up quickly. We've broken, we're downtrend on the 4 hours. Let's just focus on this leg. We've broken at this leg. We put in a low, draw our premium and discount. On the 15-minute, the market's starting to push back up. We're only trading pro trend, as I'm explaining right now. So we're not worried about this 15-minute market structure that's pushing up. We're waiting for 15 to tap into this area, and we get our little chalk that we're looking for, and we take our trade out of this one. So it's probably not that clear because it's kind of doing weird stuff on the 4 hour. And essentially when we take this trade, we're looking to go to break this low. That's essentially what we're targeting, this low here where my arrow is, because that was the low that was put in on the last push down. And that's where the highest probability is. Okay, we've gone deeper on this and we pulled all the way down deeper. However, the high probability target for this is just the 4 hour structure on the next low. This is where you can get more advanced. And like I said, with the daily structure, you can then look and target, potential daily areas down here. But essentially on the strategy, the highest win rate, highest probability pro trend is targeting the next break of the 4 hour low. And so I'm going to just do this, show you on the 4 hour, and then I'll go inside a leg and show you on the 15-minute what it looks like as well. But just to give you an idea, this is essentially what we're looking for. So same thing on the next leg. Okay, we broke structure. We've put in a little bit of like a weird looking low here. We draw up our area. Unfortunately here again, we've got front run again, but potentially you would still have looked and been like, okay, this is very close. I'm looking for, that same change of character on the 15-minute to then bring us down. And in between this, this is, okay, so this is the pro trend reversal trade I'm talking about. So we're 4 hour and we're looking for 15-minute reversals, bearish, that go pro with 4 hour trend. So this is the reversal point where we get the chalk. So that's the same thing as I drew up before. It's going to look, I'm going to draw it bigger over here. Where is my thing? So, okay, I'm looking at this leg from this bottom. So, okay, we've got whatever happened on the 15. It's crawling up, pushing up. We then, this is our 4 hour. Okay, it front runs a little bit here. Unfortunate. It probably would have faked us out a little bit with that front run. And we're looking for, these are reasonably high probability trades compared to the counter trend reversals because we're moving with a higher time frame. So then we're looking for our, our chalk, our entry, and essentially we can target the next break of the lows. So, okay, we've got a front run here, but it looks like we can zoom in this soon. It looks like there was a 15-minute chalk of some sort. We get in there on our low time frame and, we're targeting the break of the 4 hour low. I don't know why that's, you know, something like that. And we're targeting the break of this 4-hour low because we're pro trend, you know, so we're getting our chock at the most extreme point in the 4-hour and we're targeting the break of the 4-hour low because it's the 15-minute reversal is pro trend, pro 4-hour trend that's that first one. But I'll zoom in on this one because it's not the cleanest either. So I think it's a good one to give an example because the markets generally aren't clean. And like you find like a lot of the examples, unfortunately, show like perfect markets, you know, rather show just like real examples of one of these candles would have been like the take profit in my eyes. Okay, so here we are. We've established a 4-hour downtrend. Now we've got huge amounts of imbalance here. We had this one swept some liquidity there. We broke structure. It's a nice unmitigated 4-hour point of interest here for us. I've discussed my last video with the imbalance above. I'm not so concerned on the 4-hour time frame because I'm taking it on a 15-minute confirmation anyway. I'm not taking risk entries out of the 4-hour. So I'm looking for, 15-minute chock. So the imbalance above isn't such an issue in these sorts of cases because my stop loss isn't sitting there. Okay, let's move. Okay. Oh, that would have been a tricky one here. The market isn't always perfect. If we've been, itching for this to happen, and we've just front run it by a tiny amount, it would have been quite tricky. This is why we have like two different types of entry criterias. One with the reversals, which is like, very early entries because, you're going against the 15-minute trend, but with the 4-hour time frame, which is like, pardon me, your 4-hour overrides your 15, especially in these extreme zones. So what I'm going to focus on the pro trend again. We had our break of structure, it happened. We ended up putting in like some sort of bottom that we don't care about, but we've just identified on the 4-hour that this is our new 4-hour bearish leg. We're going to wait for the price to come back into our discount zone. We don't want to, trade counter trend. We know how to. I'm going to show you how to, but we're not interested in this case. We're only looking at pro trend. We did sweep out a lot of liquidity here to front run it, but potential. So front run is just when the price comes up just like in front of where you wanted it. So we're looking for the price to come into this 4-hour point of interest before we look for our chock, because that's what our strategy and our time frame says. And when prices stopped just like in front of it or behind it, I guess it's however you look at it. Like I just say, like it just came just before it, then it's rejected. And we've come up just before it again and it's rejected, just before it and rejected, just before and rejected. So we didn't actually get a touch into our 4-hour order block. This is the candle just for like example purposes, because this is a tricky one. I would have waited for bearish order flow, which means like a chock and then a break of structure. And then we would move down from there, which I'll show you, which is like, then you get the continuation trades. But however, if we had a tapped into here, I would have been happy. You would look at the last low that led to the high would be this one. We would then have our 15-minute reversal chock, which is in line with our 4-hour market structure after our pullback into the discount zone and tapped into our 4-hour point of interest. Okay. And then we would, as we do, we mark up our, well, be up here, our 15-minute order block, essentially depending of once you're entering off pulls like 0.25, right there. This wick would have tagged you in, your stop loss just a bit above here. And because we know we're with 4-hour trend, this is our 4-hour low that we've had in that we would have marked. None of this has happened yet. So this is our 4-hour low, and that's where we target. Okay, so that's what I call 15-minute chock reversal pro 4-hour trend. The next one that would have come into play is I would have been looking at where was our next, break of structure. So essentially, we would have got tagged into that. We've got kind of two options here. You can either see this as like one leg down push, there's your next, there's like your bearish break of structure, like your bearish. So we've got the push up, the chock, that's our leg down. We moved around, moved across, and that's the break of structure. So this would be a valid order block. You're right there. You would happily include that one because this was like the last push up. So these are like the trapped orders. So here we've now confirmed. Okay, let me draw this up. We've confirmed now that we've had a shock and we've had a 15-minute break of structure bearish. We're now back in 15-minute time frame bearish with pro trend with 4-hour bearish. So these are that continuation trade. This is a okay, this is a good example of a flip zone as well. I want to explain again, people ask. It's the last valid order block before that led to the break of structure immediately, pretty much. And I say valid because we wanted to have our sweeper liquidity here. You know, look at all these highs that we had swept. Had this liquidity swept, really nice. It's really nice when you have the end candle have the highest wick as well. It means that there was really no liquidity left behind. We had a nice break of structure. We had this imbalance here left behind. And yeah, we're pro trend moving down with the market here. So really nice order block there. So we would set up the short here. And so this is our 15-minute continuation trade. So this is the next one. So these are both the pro trend. Yeah, sorry about that. These are both the pro trend trades. So you're targeting the 4-hour low. So down here. Yeah, I deleted that, but essentially that's you don't need a chock or anything like that. You know, some people like to wait for like even, you know, I see Paul do it sometimes. Other people with scalping, you look for like a small, you know, even you went on the low time frame, looked for like a small reversal pattern that we talk about, you know, the low time frames moving into this, then we get that. And then we take off even smaller, but it's not necessary to do that, especially when you're confident of the trend. We're following 4-hour trend. We're following 15-minute trend. Really nice order block here as well. And we're targeting that 4-hour low down here as well. And pretty much how that works is you continue this continuation trading. Okay, we didn't get anything here. Okay, so it didn't get tagged anything here. You kept moving down. What we had here was a nice like sweeper liquidity. It's another sort of video I want to talk about. It's like the sweeps of liquidity versus chock. And it's really where chock happens. So, you know, we're moving down a 15-minute bearish trend, 4-hour bearish trend. You know, we haven't had any sort of like, you know, there's no areas of 4-hour bullish interest for us here. So, you know, pretty much we can sort of say, hold on a second, you know, even though this would look like a chock, it hasn't, you know, broken any significant structure and it's not within like a, you know, 4-hour point of interest. So yeah, the question is, are you targeting that low because we're pro trend? And yes, that's the case. So that's what what I was talking about. The targeting for this is, you know, once we're pro like a 15-minute continuation, that is pro 4-hour trend. So 4-hour downtrend and 15-minute downtrend. With this strategy, you can target the 4-hour low. That can be your final target. This is what we consider 15-minute reversal, chock, entry, pro 4-hour trend. Because of the bearish chock in a bearish 4-hour like point of interest in a bearish 4-hour trend. This is 15-minute continuation pro 4-hour trend. So that's why we're targeting these 4-hour lows, because we're pro 4-hour trend and we're expecting the 4-hour to break and continue that 4-hour trend. So yeah, and then we're pretty much just following the 15-minute trend down until we get a break of this low here. Realistically, like we saw the just last week with the bullish trend, which I'll go to, it can just keep on pushing down and you can keep following the 15-minute continuation. Once you're outside a big 4-hour range like this or 4-hour leg, you start just looking at outside targets or, you know, different sorts of stuff. But this is when we're trading within a 4-hour leg, we target the break of the low. If we keep getting continuations down here, which, you know, I can show you if there are some examples, then we're just, you know, outside of this leg, our target is like 15 breaker structure or maybe some other high time frame area of daily point of interest that we found to the left. But once we're in this leg on this pullback, the traditional sense of the strategy, we 15-minute chock here, target the low, 15-minute breaker structure here, target the low, 15-minute breaker structure, doesn't get filled, left some liquidity here with a fake chock essentially, because the chock happened, you know, not somewhere that we're looking for to go longs. There's all this liquidity here. We're not in like any sort of high time frame area, so we're not looking for chocks in this area. So it's good to not get confused by this. It does happen. It's fair enough. You know, maybe you think, oh, you know, we could go long here. You take the loss and then you realize, okay, we're back, you know, we're back down trending, which then what happens is we get the breaker structure again. And so now we're like, okay, that was just a run of liquidity, which we probably would have avoided anyway due to some of our rules having such a huge amount of imbalance resting above these points of interest here. However, it's not always that we will avoid it. These do happen, and you just get stopped out, and it's just part of trading that you just take losses. You know, say if we lined up this nice point of interest that led to the break of structure, you know, it's still okay. There wasn't really that much imbalance left, which might have been another telltale sign that we may sweep the highs. There's heaps of balance above. So, you know, there's a few -1s on this order block that might have just told us to leave it. Otherwise, you just take the loss. It is what it is. It's part of trading. So then we've got the next idea. We still haven't broken this 4-hour low. So that's still our target. We now have an area that's just swept huge amounts of liquidity, a big push down. We've got to break a structure, huge amounts of imbalance left behind. We've then got, you know, some liquidity left here. So we've got like some liquidity here. We've got our order block up here. You know, okay, we do have some imbalance above, but maybe we have, you know, we can see we've built up a bit of liquidity to be swept. So we think maybe this will hold, or, you know, as we could also cover the imbalance slightly above here as well. There's a couple ways to counteract that with it, especially when it's only a small amount like this. We can still enter on there as well. Some things I'm doing as well is like, you know, cover the imbalance with your stop loss, just to be safe that you're not just going to get swept out, which does happen. And we haven't broke this 4-hour low yet. So this is our target here. Okay, so that would be our last trade. So in this leg, okay, we would have missed this one, but we would have had, you know, 8.3 and 3.2 approximately. Now, this is just for an example across, I don't know, what was this, 2 days type of thing. Just to give you an example of, you know, this one didn't fully happen. That's a chock reversal, a 15-minute continuation, and then another 15-minute continuation trade here. And now what happens is, you know, we have to be wary of, we've broken now our 4-hour low. Okay, so that's where our targets were for all this there. And so essentially this next continuation trade here becomes a little bit tricky, because now where are our targets? You know, we have the low it put in, you know, there's so much liquidity being taken down below. There's so much more liquidity or in stop losses being left above these stop losses here. We've now got equal highs here, equal highs that we just read up. There's still the imbalance there. There's still this unmitigated area. And we've obviously ended up sweeping this area. It's one where you could potentially watch for a low time frame, or, you know, have a look at now potentially, okay, is this the new leg for the is this the new low for the 4-hour? And are we going to draw our premium and discount again? Okay, so it's once you break this low, it's definitely pays to zoom out onto the 4 hours. It doesn't mean that this most recent one can't hold and send us down. It's just in terms of context, if we've now got equal highs with imbalance above, with a nice order block that's been unmitigated slightly above, then you want to think, I want to, is this a high probability order block when it's got, all these, maybe do a minus system, okay, it swept liquidity, it broke structure, that's +2, but it's got imbalance above, -1, it's got equal highs, -2, so it's sort of like a neutral order block that's not that high probability. I don't have that system fully in place yet, but it's something that I run through on my trades when I have my piece of paper with all my rules in front of it. So that was the first two types that are pro trend. And so now I want to look at, when we're going counter for our trend. They also offer, some quick opportunities as well that you can take advantage of if you know like how to trade them. So I'm not like cherry picking, well, sort of am, so I can give you the right examples, so for this one, I can have a look what happened inside and see if we would have got faked out. I'll pull across both. So these are both areas that we would have been looking for, even potentially this one as well. But what we're looking for, because we know we're 4-hour uptrend now, these are just areas for potential short-term or long-term reversals, but we're not expecting long-term reversals until, just off a 15-minute chock. Potentially if this led to now a 4-hour chock, and then we've started moving down, there's potential there, but we're not anticipating a whole market shift once we're moving up in a 4-hour uptrend. So what I'll zoom in onto 15, it's quite important to, we kind of get caught up in these shock reversals and everyone wants to catch the highs or the lows, but we have to be aware that they are, if well, in this I'm showing you, do we have to be aware of the difference between a shock reversal pro trend, like I showed you, we've had the pullback on the 4-hour and we're looking to break the next 4-hour low, whereas these, when we're looking at old time frame ones, we're looking at bearish order blocks in a 4-hour bearish order blocks in a 4-hour bullish uptrend, whereas our 4-hour bullish order blocks are these ones, and these ones are more significant than these ones. These take higher priority in an uptrend than these old bearish ones. These are for short-term counter trend trades where we get into some sort of shock here and we trade it down into this until we get some, depending on, if you're happy to hold it longer. So just that's important to understand, I think, and not get caught up into wanting to have the entire market reverse at this point and missing out on the major trades down here that are going to make you probably more money in the end of the day. So let's just jump on the 15 because I want to see how these three different, if we had any chances to get in on any of these. It looks like it's pretty heavy rejection. Yeah, so it doesn't look like there was any opportunities here. There wasn't really any fake outs. We would have just pumped straight through this old order block. We then, hit this old bearish order block and did get a rejection. We did get what I guess you could call like a chock within here because we did have some market structure on the 15 here that led to the high that then broke. However, the market moved down so fast that we then already have tapped into our 4-hour bullish order block. So any shorts from here are low probability because we've already completed our retracement and we should be looking for longs, because if that makes sense. So this isn't a good example for counter trend. I couldn't see how it looked, but just so you know, these counter trend trades in terms of targeting, say the price, I'm just going to draw it quickly. Say we did get a nice entry off this, instead of it dumping like that, we got our little chock and then, the price came back up and gave us like a nice entry. Realistically, conservatively, the 50% line, it would be a nice area to target. The highest probability is like the break. Ultimately, you could theoretically, according to our back testing, as long as you've marked out your 4-hour point of interest correctly, you could target this area. As we saw before, sometimes the price can just miss it. So you have to be aware of that. You know, you might want to target slightly above it, just in case it does what happened, what we saw in the bearish order block, where the price, you know, comes almost into it and then rejects. But we're not expecting, the difference between here is we're not targeting the lows. We're not expecting the 4-hour trend to finish just because there's a pullback on the 15-minute. So I think that's very good thing to understand and be aware of, that this is a 15-minute reversal but counter 4-hour trend. So we're essentially what we're doing is we're shorting the market until we can go long again, you know, until this long opportunity, or where the market should show us a long opportunity, can happen. Okay, this happens super quick. You know, the market does what it wants. It doesn't have to trade perfectly. It doesn't always give us the opportunities. But if we saw this, a lot of people would still be interested in, you know, they'll be thinking, oh yeah, look at this, you know, this has had a huge push down from here, you know, that's definitely going to see a reaction. But if we understand the strategy correctly, we're 4-hour uptrend. We've gone into our discount zone, also tapped into our 4-hour point of interest we just covered before. There's no reason for any more pullback. The pullback has occurred, you know, so there's no reason for this to hold and the market to push lower, because that's just like we're going against the trend, and these are the ones that are gonna get us losses. So let me see if I can find actual counter trends that played out. There's no reason that top one could have held, but it's very low probability, the one I gave you, because our 4-hour market structure is already pulled back and we're ready to go up again and follow our 4-hour trend. And, you know, the pullback's already done, which that's all you're trying to catch is, you know, maybe a quick trade to trade the slight pullback before you're ready to go with the trend again, essentially. I wanted to show you if I could find like a valid counter trend sort of trade. Let me have a look. I think this was one I actually took. So this was like, so we had some order blocks, swept, and okay, mitigated. This was the last one here. It was on this leg. So, you know, these are past 4 hours that we said we're looking for some sort of reactions. We had like a mild tap out of it here with quite a huge rejection, but it was still, you know, what I said in the last one, I like to see, you know, at least 45% to 50% is, you know, mitigated, which we ended up doing there. So what happened on this one is that was our 4-hour old point of interest here. So I'm going to show you like a chalk reversal counter trend that we had. So what we pretty much had here could have been quite tricky here. You know, there's potential for a loss. You know, I think there was a nice break of structure here. We're inside a 4-hour order block. We then had, I guess, what you would call a chalk. And what we could have, this could have been the one that we took. And we would have taken a loss on that. Which, you know, it's okay. We're going to take losses. We know chalk, especially counter trend chalk is like probably the lowest probability trades of the whole strategy. Then we had another chalk here down. Okay, so we've swept the high, we've taken the highs again, and then we've broken the low that led to the high. You know, and so all these order blocks are mitigated. This one didn't even sweep any highs. We've got move down, then we've got this nice order block here that swept some liquidity. It's always good to mark it out on your charts, you know, because then you can tick off your boxes. Okay, let's sweep liquidity. You know, I can turn this on. You know, we can see, that's why I like to have these imbalance indicators. You can just see it so clearly. We've got imbalance left over there. You know, it's what I would refer to our flip zone, or the order block before the break or before the chalk. And then we enter off our rules of our order block, you know, 25%, or depending if you have your own rules. My ones, I measure the size of the order block now. I'm experimenting with that. You know, so it's like 7 pips. Oh no, hold on. Yeah, it's like 5.5. So I'm going to enter on the 25 because it's between 5 and 7 pips. And then, like, I'm pretty sure I shared this to the group. Here's like the target one. You can either take profit there, Or what I sometimes do is I go on the low time frame and look at trailing my stop loss down with this. Once we get to the discount area like this, you saw on the bearish one, okay, we've got a 15-minute downtrend here and we're getting excited. Oh yes, look at this beautiful order block here. I'm definitely going to trade this, but we have to remember we are counter 4-hour trend. Thank goodness we drew our discount, premium and discount zone, because now we know, okay, we didn't tap into our 4-hour order block, but we've now moved into our discount area, which we know from our strategy in the backtesting data that this is an area that we want to be more focused on looking for longs to go into to follow our 4-hour our trend. So we now, as soon as we've tapped into this area, even if we haven't tapped in the 4-hour order block, this is goes to very low probability, because we're now counter trend trading at the 4-hour after we've already had the 4-hour retracement. Especially then we're going into the trade, we had a shock, which makes it like pretty much just invalidated, coming out of a bullish 4-hour retracement in the discount zone. So it really pays to even write this stuff down. Where are we? So you don't get lost in the charts, and you understand that this is not, okay, we got a reaction from it. It can happen, but it's not something, that is high probability that's going to hold. And you can see that there. Would you drop some? But yeah, I wouldn't have taken this chalk because it was a wick break. But we're theoretically saying if it's a body break, this is now our chalk reversal, 15-minute chalk reversal pro trend. So let me mark out. Okay, 15-minute chalk reversal counter trend. And we know 15-minute 4-hour high is our target for these types of trades because we're going pro trend. I think I've only got less than a minute to go, so I think I'm going to leave it there. But yeah, I hope that made that a bit clear and clear up the expectations of each type of these trades. Maybe write down each type of these trades, have your rules there. And then which what am I entering right now? Is this 15-minute reversal pro or counter 4-hour trend? Is it a continuation trend? What is this and where are my targets? So you have your entry, your stop loss, and your target all in place, at least to start with before you put on the trade.